What if I told you I could guarantee you a negative double-digit rate of return year after year, and in 5 years, I could even cut your money in half? Would you take it? Of course not, but for some reason, asset managers on Wall Street can't get enough of that trade. Hey, what's going on, guys? My name is Evan, and welcome back to the Financial Dominance YouTube channel. Today, I'm going to tell you why Bitcoin will be worth $5 million a coin, and why it's actually a lot more realistic than you might think. Why would anybody in the world buy bonds that will appreciate virtually none and pay only a couple percent annually in interest, when you could just loan your money out using a stable coin and get 13% interest? Or loan out your Bitcoin and get somewhere in between 1 and 5% interest, and also on top of that get capital gains. The difference is, in one market, we don't have the government coming in and manipulating prices and yield curves. The free market would be coming in and repricing the bonds. But currently, nobody is worried when the buyer of last resort, the US government, is coming in and scooping up any sort of drop in bond prices. And eventually we're going to see this balloon that's been pumped up expend all of its air and be pumped into Bitcoin in this new financial system. And we're going to see the bond market have a massive contraction. And tens, if not hundreds of trillions of dollars will be chasing a better yield than the negative real yielding bonds like they currently are. And this is what happens when you have government step into what are supposedly free markets, propping them up just to provide liquidity to these big companies who have inefficiently managed capital for years on end. And many of these companies are so overlevered to the point where now, when credit starts to freeze up and nobody wants to lend money for cheap anymore, and our government has to come in and be the buyer of last resort and keep the yields on bonds from going up and making the cost of capital skyrocket. And because if we didn't have a government coming in and printing money to bid the price of bonds way up, then the price of bonds would come down and the yield, the coupon, the percent the company would have to pay in interest would skyrocket. And all of these big inefficient companies would end up defaulting because they can't pay that interest rate. And then the whole system would come crashing down and implode on itself. And this is why the stock market is currently at all-time highs, and it's going to keep going. And stocks are at risk too, but that's a whole nother video. Everyone can currently borrow money and lever up until the government either decides enough is enough and they raise rates and let the economy have massive amounts of bankruptcies and defaults, and the stock market crashes, or they're just going to keep kicking the can down the road. Because it's major career risk for the politician that decides to crash the whole economy for its own good. Because for over a decade now, there has been no solution to the propping up of these old, zombie, bloated, inefficient companies. Like in 2008, they probably should have let a bunch of those automakers go bankrupt, because here we are a decade later and a bunch of them still suck, and they're currently still getting bailed out. And this amount of quantitative easing is actually just going to keep speeding up. And eventually we're going to have the same thing that happened in Japan, where the Japanese government is doing so much quantitative easing that they're no longer just buying bonds, and they're actually buying equities now. And what we're seeing is a nationalization of a bunch of companies over there, because they're buying so much ownership in these companies by buying their stock that they're literally nationalizing all these companies. They're part owner of a bunch of companies. Some of the worst systems are government systems. It's not free markets. That's why some of the most efficient markets are the capitalist markets, where the free market decides. And that's where we're headed. A big old pile of stagflation, where no companies are actually growing because they're just propped up by a never-ending money printer. And by that time, due to the money printing alone, the sheer volume of cash that it takes to prop up these companies, that alone is enough to make Bitcoin worth hundreds of thousands, if not millions per coin. And on top of that, since Bitcoin and this new financial ecosystem has already repriced the cost of borrowing USD, the people in the legacy system will wonder what's going on and why this market over here has decided that the cost of capital is upwards of 13% a year. And then all of these buyers of bonds are going to realize that they can get a much better real return somewhere else. And the whole credit market is going to get sucked into this new decentralized system. And at that point, Bitcoin will be worth so many millions of dollars, because the dollar itself is not even going to be worth the money it's printed on. So that was a lot of information, so I'm just going to give you guys a quick little Cliff Notes summary version of the whole thing. In a free market like you have on all these crypto lending platforms, you can lend your dollars and get roughly 13% interest, or lend your Bitcoin and get around 1 to 5% interest and still get capital appreciation on your Bitcoin. But in the government manipulated bond market, you only get 2 or 3% for lending dollars, because the government is bidding up the price of bonds so the interest rates or the yields or the coupons stay low, so these big bloated companies can afford to pay the loans so they don't go bankrupt. So my question is, what happens when the pensions and hedge funds who are buying these bonds as well and lending out their money realize that they can come over to this actually free market and get 5 or 6 times the interest on the same deployed capital? The bond market contracts to a fraction of its current size, and instead of a $100 trillion bond market, the whole bond market contracts down to about 20 or 30 trillion, and maybe even less. But by the time the transfer of value reaches some level of homeostasis, Bitcoin will be worth millions per coin. This is going to be something that's going to be one heck of a sight to see, and it's going to be pretty spectacular, and a lot of people are going to lose a lot of money. But that's why I make these videos. I would hate to see this whole thing play out and then you have the average Joe like you or me look back and wish we knew about this, because the rise of Bitcoin is going to be so huge. This is as big, if not bigger in monetary terms, than the internet itself. It's like there's been no other time in my lifetime, and probably in many people watching this lifetime, where you can actually get a piece of a revolutionary technology that is going to totally restructure the whole financial system. Anyway, guys, make sure you check out the pinned comment. I'm going to put some interesting links down there that I think people should watch. And yeah, thank you guys so much for watching. I'll see you in the next one. Later.